The former Prime Minister, Sir John Key, has come out against recommendations to impose a capital gains tax, concerned it will have a crippling effect on business and farmers. Sir John, who is the chair of New Zealand's ANZ Bank, as well as a director of Air New Zealand and the United States global media giant Comcast, spoke to business reporter Nona Pelletier following a candid keynote speech to members of the Institute of Directors. He says anything that restricts or impedes New Zealand's competitive edge is bad for business.
I used to worry when I was Prime Minister that that if competition was reduced and Qantas and all these people got off the Tasman, or at least reduced their activities, that we'd be held hostage to Air New Zealand. But their model has changed at Air New Zealand, which is to say, how do we get maximum volume? And to do that, there's a price elasticity curve, and they need to keep prices down. So yeah. Look, there are some places which are more expensive to fly to in New Zealand, there's no question. But overall, if you look at where most people fly, our prices are very competitive. So overall, then, do you think the New Zealand marketplace is encouraging of competition if it facilitates that? Yeah, I think so. I mean, for instance, when KiwiBank got set up, there was a market for KiwiBank. There were people that wanted to bank with them, but the vast bulk of New Zealanders stayed with probably the big four because they, for a variety of reasons, had their historical banking records with them, but actually were happy with what they did. Now, technology is going to change a lot of things. Open banking, for instance, in Australia will come to New Zealand. You'll be able to move your bank records like you can move your phone records. In a small market like New Zealand, it's always difficult to get beyond two big dominant players. In Bank's case, you can have four. But if you think about, say, how difficult it's, for instance, been for 2 Degrees to really get into Spark and Vodafone, it's just 5 million people. It's more difficult. When you talked about competition and in the wider, more global sense, New Zealand's competition is with other organisations, companies, jurisdictions trying to access that middle-income Asian market. That's one of the things you talked about. Do you think New Zealand is doing a good enough job of encouraging competition in Asia? And how about its relationship with China at the moment? You mean competition for goods to be sent to New Zealand? So New Zealand could sell into those markets, because that's where our market is. Our market isn't just those 5 million people, it is a greater market. So in terms of how New Zealand is managing those relationships, you said that they're very nuanced. People are very careful about how they perceive New Zealand. Do you think New Zealand is doing a good enough job of New Zealand Inc., promoting New Zealand Inc., and managing those delicate relationships, particularly with China? Well, I think as a general rule, most smart politicians would understand that that's really important. And you could see, obviously, for our government, China was a big priority. I mean, I went there 7 times as Prime Minister. I think one year we had every member of the Politburo in New Zealand, and we put a lot of store and stock in the relationship with China, and we were careful with it and treated it with a lot of respect. I think you can see that the current Prime Minister obviously thought that was important to go there because she was, seemed to be at least publicly frustrated that she hadn't been able to go there early enough. And it just makes sense because there are so many consumers in that market. And take a company like Allbirds, I mean, it's quite an interesting little New Zealand company, doing amazingly well from what I can see. It doesn't have a store in New Zealand. Its whole strategy's been selling things pretty much online. A few bricks and mortar store in the US and a few other places, but taking a product in merino wool shoes and bringing them to the world. And so free trade agreements, access to those markets, they really matter. And we've got some big holes. I mean, post-TPP, not having an FTA with the United States is a massive issue. Getting the upgrade done with China will be at least helpful. Getting FTAs into countries like India, hugely important. Europe still, we don't have an FTA. I mean, because we can sort of dismiss that, but without a free trade agreement, we pay more for our goods to go there, and we're often limited in the amount we can send. How big a deal do you think the Huawei debacle is, the way that there's been big question marks raised about how the telecommunications industry can move forward with 5G without that as a supplier? I don't see all the current advice. I can only tell you what I saw when I was there. But as you've seen from the Brits and others, they've come out and said, yeah, well, we tend to progress on with Huawei as a supplier for us, and we're not going to follow what the United States have been saying. I think New Zealand runs an independent foreign policy. It has to determine what is in the best interests of New Zealand, and has to determine whether if Huawei is the right supplier, it looks at that and makes a logical, calculated decision on what it's doing. I mean, I was supportive of what they were doing when I was Prime Minister because I didn't see anything that indicated to me that there was a substantial issue.
What about the capital market review that's going on right now? So there's concern that there's a very small pool of options, and that's where your roots were as an investment banker. What do you think what's the key to solving the capital markets issue?
Yeah, okay, so I think I don't think it's based around trying to change the tax laws. I mean, I've been opposed to capital gains taxes for a long period of time and my position hasn't changed. The highly inefficient taxes, they really don't actually work, and they actually, for all the amount of the hassle you go through, they don't raise a huge amount of revenue. And they'd be a deterrent, in my view, to hard-working small companies who are trying to grow in the world, who often make very little income, by the way, while they're going along their journey until they eventually one day sort of float. The biggest thing we can do to really support those businesses is two things. One is continuing to grow, KiwiSaver and the amount of investable capital that's there, and probably the way that those pools can be invested. So if you think about the United States, what's made their structures so strong is that they've had, amongst others, the NASDAQ is an amazing way of bringing capital to the table, huge amounts of VC and angel funding, a pathway to float those companies, a risk appetite. And sure, it might only be a tiny, tiny fraction of what people invest in their 401k plan, which is equivalent of their KiwiSaver. But nevertheless, it's an enormous amount of investable capital. And so you see, really good companies. And this may or may not be factually correct, but when I was in the US 2 weeks ago, someone was trying to tell me what a great American company Allbirds was, until I tried to point out to them, actually, it's a New Zealand company. And, you've seen Leo DiCaprio as an investor in it, and if it floats, it'll probably float in the US. I don't know. I don't have anything to do with the company, so I'm just saying about what I see. But why would that be? If that was the case, the answer is because the investable capital is there. So we need to really try and develop that in New Zealand. It's not easy, but that's what we need to do.
Do you think that your view will fall on deaf ears, though? It does seem that the working group has come up with proposals which really just point to a capital gains tax, and really that's the view. Yeah,
but the politics of it is really interesting, isn't it? And you'd sort of ask the question why. I mean, we already have a capital gains tax. Well, for a start off, for private family homes, everyone's agreeing that they're exempt. We now have a 5-year bright line test. So if you have an investment property, okay, if it's beyond 5 years, but really, I mean, how many would be held much longer than that? I don't know, some, but not huge numbers. Farming, well, it's already under an enormous amount of pressure. I mean, the Royal Commission in Australia came out and declared that farmers were a vulnerable group, vulnerable category. So if they're vulnerable in Australia, one assumes that there's not a huge amount of differences in New Zealand. So you've now got on-farm costs going up. You've got foreign buyers ban, which means that the probability of, in bad conditions, of a foreign buyer being able to buy a New Zealand farm at any sort of value is eliminated. And now we're going to say we might apply a capital gains tax to them. I think that's going to be a real challenge, and arguably banks will have to hold a lot more capital to fund those farms, because that's going to be the new rules under the Reserve Bank's requirements. I mean, that all is quite a storm of issues and activity that could have an implication on agriculture. So I don't know. We'll see whether the capital gains tax really progresses. One of the things that I wondered about with the carbon tax and climate change initiatives, the meatless meat, the emissions that you get from agriculture sector, that's been more or less exempted, but will it be in the future once the opportunity to choose some other options is available? Yeah, I mean, if you look at New Zealand's emissions profile, it's always been different to other countries around the world. So we have vast bulk of our energy production is renewable, 85% and growing. That's unusual around the world, but we've always been a country where methane and nitrated emissions have been a big part of our emissions profile. And my view of that is that we should absolutely demand our farmers do something about that, but we have to give them the technology and the capacity to do that. Just telling them off or making them destock is both unfair on them and unrealistic. I mean, if we don't produce a certain amount of lamb and a certain amount of beef in New Zealand or a certain amount of pork or whatever, then someone else around the world's going to produce that. It's not going to stop. You know, international demand is not going to stop because New Zealand on a self-inflicted basis stops itself. So absolutely we should be spending money on research and science and technology, and our government did a lot of that and got a lot of global funding going into that space. I'm actually a bit more optimistic than others. There's already nitrate inhibitors and things that are starting to show some quite positive signs. So to me, with climate change, I've always been of the view that people will act very rationally. I mean, what's going to encourage people to get into an electric car is going to be when that car is, you know, in a capital sense cheaper and when it can travel further. But in principle, you know, you're going to see a big uptake, I think, in electric cars over time. Not in totality, but there'll be quite a lot. Not because people are necessarily thinking it through, but because people want to do environmentally the right thing as long as they don't have a deterioration in their standard of living.
What's your view on the offshore oil exploration and the halt on drilling there and new licenses?
Well, again, I'm opposed. I mean, I can't see why you would do that. I think that offshore mining's, you know, and drilling's been an important part of New Zealand, and we've got a place to play in the world, and again, if we don't produce that oil and gas, then other countries will.
And that's former Prime Minister Sir John Key talking to senior business reporter Nona Pelletier.